President Trump appoints allies to key institutions, tightening his grip on the US economy. President Trump has picked loyalist E.J. Antoni to lead the Bureau of Labor Statistics. That's after firing the former head of the agency earlier this month. Antoni has previously said CPI readings produced phony baloney numbers, raising concerns about the future integrity of the data. Meanwhile, Trump has jumped at the chance to wield greater influence over the Fed, nominating Stephen Moran to serve as governor. Tim Graf is head of macro strategy for EMEA at State Street Global. So Tim, what do you make of the BLS appointments? Will US economic data still be reliable?
I think for the most part it probably will be. There is an institutional question about the integrity of the data, particularly given this is somewhat of a politically motivated appointee. But by and large, these are huge institutions that collect data. And largely, we're talking about the next couple of years where we might have this concern. After Trump leaves office, I suspect you don't have those concerns quite as much. And the institutional inertia, while he is in office, probably does limit some of those concerns.
Well, the first test comes today with the CPI numbers due for July. What are you expecting?
So we're actually looking for a little bit below consensus on core inflation. Headline, we also see with the consensus at 0.2% month on month. But for core, we actually see a little bit of softness. There are, of course, some tariff-related pass-through effects coming through on core inflation, but these are likely to be, as they have been in recent months, offset by lower shelter cost inflation, as well as some drags that we anticipate from airports, airfares, and hotel costs. So actually, a fourth consecutive below consensus reading on core CPI is our call for this month.
Have the full impacts of tariffs from President Trump's trade policies really hit inflation yet?
They have. They certainly have in certain sectors. And I think you could say that going back a month, 2 months even, you were starting to see it in sectors that had high import content, things that we track using online prices in sectors like household furniture, recreation and electronic products. Those sectors definitely have seen very rapid pass-through from tariffs. But again, as it has been in previous months, it's not been enough this month or in those months to really create an upside surprise in inflation because of those dampening factors I mentioned.
Meanwhile, Tim, dovish rhetoric among Fed policymakers is starting to grow. Could we see a cut as soon as September?
Yeah, I think so. The market's fully priced that. You had a couple of votes for a cut at the last meeting. And ever since then, the data has really confirmed that those were probably the right views to have. The labor market is a lot softer than was previously believed. And that is a big part of the Fed's mandate. Inflation is, of course, important, and those pass-through effects will continue to perhaps support inflation. But the labor market has clearly slowed to a point where I think a 25 basis point cut is a given. And actually, I think markets might start to price for a 50 basis point cut. Not that it will be delivered, but that the probability is above, say 0%.
Well, Stephen Moran has previously said that Trump policies are all disinflationary. Could his appointment push the Fed to more easing this year, even 3 cuts?
I think they might have done that anyway. His appointment probably solidifies that view. It makes it a little bit more heard within the voting members. But I suspect at least 2 cuts were coming. The Fed themselves were, in their projections, penciling in 2 cuts. I think a 3rd cut now, given the softness we're seeing in the labor market data, probably would have happened anyway, and his appointment really just reasserts that.
So finally, Tim, Moran has written about reordering the Fed voting system. Could this be a new tactic from Trump to gain greater influence over the US central bank?
Yeah, possibly. I think there is some of the similar aspects I raised in thinking about the BLS. There is institutional inertia. Trump has only 3 years left in his term. His effects will not necessarily be permanent when it comes to that institutional inertia. But it's fair to question it in the short run. And I suspect there probably will be a little bit more political influence that will feed through into the Fed's operations as a consequence, even if the institutional credibility of the Fed, I think, will largely remain intact.
That was Tim Graf from State Street Global. Don't forget, you can watch more videos on Reuters.com.